Good morning, guys. TGIF, thank God it's Friday. We had a bit of an issue this week with the API, but it looks like it's fine now. The MyFX book website went down, it went offline for about 3 days, so it was quite unusual. But what happened was there was an electrical issue with the servers, and it was actually a mechanical fault. And so it wasn't software related, it was actually the hardware related. So it looks like there was a big problem at their data center. It's now fixed. If you've got any queries about whether or not the sheet's importing the API, you can just look at your time date stamp. Now, if it's paused for a period of time, then we know there's an issue. Okay, so just remember that's the last time it got updated. So the date is quite recent. Okay, and so the dashboard. There's nearly 9 people short in the indices versus the one person buying, so that would be normal. The retail guys are conditioned to be fearful and they love to sell. And of course, the banks will love that because they want things to come up, right? So it's a win-win situation. They'll get profit on their portfolio, but they'll also crush the small people in the process and take their stops and their liquidity as well. So they make profits on their positions and they'll crash the dumb money too in the process. So that's why this is really important. This is sentimental. Technical is based on these here. So Dow Jones, S&P, Nasdaq, Russell. The Russell 2000, the small caps. Look at the percentage change after the last 5 days. Right. So what we're going to do next time we have a big dump and on the risk, we're going to look to buys. And I don't know which one you want to do personally. You might have a preference for a European bourse or maybe an American index. You could probably maybe do DAX or S&P. It's up to you, but you just probably want to pick one and then looking to buy uh, according to your preference. I probably would go for the S&P. However, if we did do the Russell, we would have done incredibly well. So I guess it kind of depends what you want to do. Um, the Dow was a 2% return this week, but the Russell was nearly 5%. Nasdaq really pumped, so it could be a good one for Nasdaq, couldn't it? We could be trading that one, but it all depends what you guys want to do. So basically, what the thesis is that our approach. So we're going to wait for this number to get a lot lower, about 10, 20, and we're looking to buy, and then we're going to look to de-risk when we're about this level. So you'll know that things are slightly toppy on the indices, and I'll show you what I mean. So let me go to FXM trading station. So we'll start with gold, and so gold we've got the confirmation. They're going long, and we're waiting for that confirmation to draw the box. So this is the resistance and support. So we should be below 1955, okay, and we will probably come down to 1940 for a bounce. The reason for it is that they'd sold it. Yeah, it's a bit of chop here, isn't it? They sold it. Yeah, they did sell it, and they got initially paid. This is the CPI move, that move there. So we might come down to retest the CPI support. And I'll show you what I mean with the indices. So, we've got some technical resistance here for DAX. Now, if they go long, that is going to come into play, and it might have been an idea to de-risk. So if we take our strategy of buying when that technical risk calc is low, and then taking profit when it's high, we can just repeat that process and we can make a really good return on our portfolios. And remember, we're only looking to buy as well. It's really important. So you're waiting for this to fall, and then you're looking for a trap mechanic, and then you're looking for a retest, and then looking for a bounce. Okay, I don't want to be selling. Okay, you would have done well, but look, it's going to pump. All right, so you don't want to be fighting that ideally. And there's no reason for that really to have happened. It's just because we were really extreme, and that we had to, because we were extreme, we had to have a reaction from that. I mean, what's that? That's 15%. It was too crazy, too skewed, and we're getting a little bit extreme again. So look what might happen, right? So we've got technical resistance, and if they go long, we'll create a box, and then that'll be a resistance. So might be a good time to TP. And so I'm quite looking forward to our new system. I think it's going to be quite good. We just have to wait and be patient for the next dip. and slightly sideways to the S&P, and we made a very thin box here, so they'd sold it. Yeah. Well, they went long, then they sold, didn't they? So it's a little bit of a strange one. Draw a box. It just kind of didn't really do much. Here, another very thin one here. God, very thin. So these, because they're thin, they might get broken quite easily. So if they go long, we might smash through those. And so keep an eye on your levels here. Okay, and then here. Okay, and so there's some levels there. So it all depends what happens here. They might sell it. You know, to be honest with you, if it falls, they're probably going to likely sell it, aren't they? So be careful. But there should be a support. We should be above that. That's fine. Now the Dow is a lot more confusing in so much is that they sold it, so we should be above. We should be above here, but we're not. We're clearly below, and yet they've oh, that's annoying. They went long, but they got paid. It's like I said into Discord, they went slightly long, and they got paid. Right, and then they sold, and they're getting paid. So it's a bit of a strange one. I'd probably avoid this one today, and probably choose like a different index. But yeah, it is what it is, isn't it? It doesn't have to obey the sentiment, but you can see how accurate it is, you know. And they sold it here, for example. I'll become, and it might be the case that we're having too many lines, but we'll just have to wait and see. If it gets too messy, we'll just remove the lines, but we should be above that. And there isn't much to comment about the robot because we basically are where we were last night when I did the last update, and we're only going to trigger if the failure rate is high, and currently we are low because they're currently getting paid. So it makes me think it's not a terrible idea to de-risk. They're getting paid a lot. Yen has got a 0 score. Swiss has got a 0 score. So we might be seeing reversals on these two because it's unusual for the herd to be getting paid. And that's a very low score. So our robot won't trigger unless that gets a lot higher. So we might not get any signals at all from the robot. So that's today's bulletin. Be back on the weekend for the COT data, and then we'll just see what happens with the technical risk calc. If we have a big dump, we're going to be looking to buy, and then we're looking to take profit around about 80, 90, and then we're looking to secure some nice profits for our week, and then that's what we'll do. So we're looking to buy dips when that's nice and low, and then we're going to look to take profit when we're nice and high, and that's it. So this needs to go across now. And then, so whatever happens on Monday will have a difference over time. So to imagine this will be negative, and that'd be another reason to take profit potentially. But we'll have to wait and see what happens today. We might continue to pump. So just trade safely. I'll speak to you guys on the weekend.